Hey, JJ here with the Art of Value. So today I want to talk about Spotify. Just had the earnings release, earnings call, and I want to go through it. It's important to me because disclosure, it's one of my biggest positions, one of my main positions. And if you look on the screen, if you're watching on YouTube or Spotify, you will see, because Spotify is video for podcasts. So Spotify overnight after earnings went down 12.44%. So investors, Wall Street was not happy. So I wanted to see what's going on here, if there's anything to warrant that sort of drop. And my first thought is that it's being lumped in with Netflix, and Daniel talks about on the earnings call. But for this one, I'm going to do this in two parts because I don't want it to be too long. And so I'll go through the earnings call in the next one, but we'll go through some of the numbers and just what's been said in the shareholder letter. So anyway, it's down to under 196.67. So my thought is here is, do I want to actually buy more at this point if nothing fundamentals changed, if my thesis hasn't changed, if the thesis hasn't changed? Again, it's not investment advice at all. Just partly for my own benefit. If I talk about it, it makes me think about it more. Makes me think about it a lot more. So if I have to explain it. So yes, there's on the screen the earnings call, some of their highlights below. They were talking about the monthly active users going up, and they've made a couple of acquisitions, pod sites and Chartable through the quarter. And so let's put that away and let's talk about the earnings call. No, not the earnings call, the earnings Q1 2022 earnings. So the share price is now 96.67, which is the lowest all-time price. This is lower than its IPO. After its IPO, it's down 73.5% from an all-time high. But frankly, I'm not too concerned about that. It does seem pretty incredibly cheap. And as I said, 12.58% after earnings. So what happened? So for the earnings, the summary is they talk about total monthly active users rose 19% to a record 422 million in the quarter. That's a 24% increase in revenue to 2.66 billion euros. That's 2.82 billion US dollars in the first quarter. Analysts on average had expected revenue of 2.62. So in that increase, the revenue increase was 23.7% year on year. So 23.7% revenue growth in the year. I mean, at that level, we're talking, if it's 26%, we're talking the doubling of the size of the business or doubling of revenue every 3 years. So compounding at kind of mid-20s, low to mid-20s is pretty good. So MAU's monthly active users grew 19% year on year to 422 million. Premium subscribers grew 15% year on year to 182 million. It's inclusive of approximately 1.5 million disconnects from the wind down of the Russian operations. Okay, so gross margin finished at 25.2%, which is, in line. It's actually a bit better than it has been, I think. So they provided an outlook. If we think about in relation to Netflix, so their outlook, they're guiding for total MAUs of 428 million, which is this is the next quarter, it's 1.42% higher. Premium total subscribers 187 million, that's 2.75% higher. Total revenue 2.8 million, that's 5.26 higher, and gross margins around 25.2%, and an operating loss of 197 million euros. So in the shareholder letter, we can see, if you're on the video, you can sort of see this probably, if I make it bigger. And the monthly active users, yes, we can see as a comparison, 19% higher. Premium subscribers, 15% year-on-year higher. Ad-supported monthly active users, 21% higher. Total revenue, 24%. This is year-on-year. And gross margin is kind of consistent to what it has been. So that all seems fairly good, reasonable. So our business exhibited strength and resiliency in Q1. Nearly all of our key metrics surpassed guidance, led by MAU monthly active user outperformance, healthy revenue growth, and better gross margin. Excluding the impact of our exit from Russia, subscriber growth exceeded expectations as well. So obviously they exited Russia during the time, and it's about 1% of their metro, 1% revenue, I think, less than 1% revenue, 1% uses that sort of figure. Overall, we are pleased with the performance of the business and remain highly encouraged by the traction we are seeing. So first quarter highlights, we've talked about this, 19% year-on-year growth. So it was 422 million, but 419 excluding one-time benefit of 3 million active users, and that represents the Russia situation when the Ukraine invasion, they left Russia and had to count them down there. So premium subscribers grew 15%. We've seen this. Okay, we'll skip through that. But this, if you can see this graphic on here, one interesting thing that I picked up from the letter was that monthly active user growth was particularly strong in our Gen Z audience, fueled by successful product feature launches such as our lyrics experience, as well as marketing and content initiatives. I like their lyrics, how it seem to be in a lot of the tracks now they have lyrics along, so it's good. You can, especially with songs and tracks that you can't really hear the lyrics very well. So this graphic here shows total MAUs by region. I think this is interesting because it shows that it is really it is a global business. So a lot of these, supposedly global businesses have hugely weighted to one region, like say the United States. But North America is 23% of their monthly active users. Latin America is 22% and growing. The rest of the world, 23%, and Europe, 33%. So actually the biggest section is in Europe, but as I heard in the earnings call and they've said in various places that Latin America and Asia is particularly growing fast, the emerging markets. And there's a huge TAM in those regions. Premium subscribers. While this is slightly below our guidance after excluding the involuntary churn of approximately 1.5 million subscribers as a result of our exit from Russia, growth was above expectations and aided by outperformance in Latin America and Europe. This is an interesting one. During Q1, we entered a multi-year agreement with Google for user choice billing, bringing our Android users greater flexibility. So they said in the earnings call that they didn't really care how people pay, but it's flexibility on being billed by Spotify directly or through Google, through the Android platform. So the Google Play Store. So it's about user choice there about how people pay, and they've been pushing for that for a long time, including with Apple. So revenue of 2,601 million euros grew 24%. Okay, we've talked. So this is ad-supported revenue grew 31%, and they talked about this that was actually a bit down from what they expected, and it was heading for around mid-30s revenue growth up until Ukraine was invaded. So the actual ad-supported growth is higher than it was. They were going higher, but it's still good, 31% for ad-supported growth, and premium revenue growth is 23% year on year. So again, I mean, there's nothing compared to Netflix. I mean, come on. We achieved our largest Q1 ever Largest Q1 ever for ad-supported revenue, 11% of total revenue. So it's 11% of total revenue, and saw strong year-on-year growth across all regions and channels. So the ratio of ad to subscription is rising. I think we can skip some of this. We announced the acquisition of Podsights, a leading podcast advertising measurement service that helps advertisers better measure and scale their podcast advertising. Additionally, we acquired Chartable, a podcast analytics platform that enables publishers to know and grow their podcast audiences through promotional attribution and audience insight tools. So they're investing in podcasting as the biggest area, and especially to go along with that, the advertising and podcasting, and so these things, podcast audience and the podcast creators and the podcast advertising, sort of all grow together. Podcast revenue strength was led by the Spotify audience network, along with continued growth across existing Spotify studios and our exclusive licensing deals. So starting in January, we began to roll out a new on-platform podcast ad experience in the United States called Call to Action Cards. CTA cards make podcast ads interactive for the first time and allow listeners to directly discover products and services of interest without having to remember promo codes. So they're investing in all these podcast ad tools and that should, they said in the earnings call, that should add to revenue and margins later on. And gross margin finished at 25.2% in Q1, slightly above guidance and down 29 BPS year on year. The year-on-year gross margin trend reflected a favorable revenue mix shift towards podcasting, growing marketplace activity, which was offset by increased non-music content spend, investments in music product enhancements, and modestly higher other cost of revenue. Okay. Premium gross margin was 28.4%, up 51 BPS. All right. So free cash flow, they talk about being free cash flow positive, but they said that it's not the focus to have a lot of free cash flow yet. Obviously, we want to have a lot of free cash flow later on in the business, but they're thinking 5 to 10 years ahead in terms of how big and where the business is going. At the end of Q1, we maintained a strong liquidity position with 3.6 billion euros in cash and cash equivalents, restricted cash, and short-term investments. So that's where they feel comfortable reinvesting because of their strong cash position. So podcasting here, like the focus is really on podcasting because this is the future of the business and it's the future of their margins. And for investors, it's kind of what really the focus is. The question is what they're doing working? Is it going to work? And at the moment, investors in Wall Street do not seem to be convinced, especially because of what's been happening to Netflix. Sort of growth is sort of stopped. But Daniel X said something interesting in the earnings call, which I will play on the next version. I'm not going to go through the earnings call now. This will be too long. But he said something interesting about he addressed the Netflix Spotify comparison directly. So I'll talk about that in the next one. At the end of Q1, we had 4.0 million podcasts on the platform, up from 3.6 million. Growth in the number of mouths that engage with podcast content continued to outstrip total mail growth. Podcast consumption rates grew in the double digits, and podcast share of overall consumption hours on the platform reached an all-time high. We saw a double-digit year-on-year increase in new podcasts across key growth markets in Latin America and rest of the world, with more than 85% of new podcast creation occurring in our Anchor platform, which is what I use, Anchor. So and that's where you can upload videos through Anchor. Quick upload. It's not very sophisticated right now, but I expect that to get better and better. And I expect they have subscriptions. For me, it might be different in different areas of the world. It sounds like they're introducing these things in the US first, but I expect them to have a dynamic ad insertion mechanism for videos eventually, kind of like YouTube, we could say. So they talked about a global marketing partnership with FC Barcelona. So people in the US might not think this is such a big deal because they've become the main partner of the club. But as they also mentioned in the earnings call, FC Barcelona is the biggest football club in the world. And, regularly, to put it into perspective, regularly the games have 4 to 5 times the audience of a Super Bowl. And, it's like a huge football, soccer is just absolutely huge in the world, the biggest, most popular sport. All right, so that's it for now. And then the earnings call. I'll just start off with a brief. I'm going to end this, but just briefly. Daniel Ek said that at the beginning, that they came in line or ahead of every metric. They're pleased with continued acceleration of user growth heading into Q2. Compelling offers for creators, users, and advertisers. X confidence in the business continues to grow on all fronts. Streaming is driving record revenues in the music industry, plus Spotify's core business remains incredibly strong. Worldwide growth is truly staggering. Over 1,000 artists generated over $1 million. Oh, that's just talking about, okay, for creators. All right, so I'll talk about that in the next one. But so if you found this valuable, and I'll do a second one about to do with the earnings call, which is kind of the Q&A. I mean, just running through the metrics. We can all read that quickly, but looking at the earnings call and interpreting what he said, and listening to it, you get a feel of how what they're thinking, and how they're feeling about things. And I mean, personally, I just think they're being sort of lumped in with Netflix, but really, it's the thesis hasn't changed for me so far from what I've seen. So we'll go there. So if you liked, so like and subscribe if you found this valuable in any way, and the video will be available on YouTube and on Spotify video, which is I'm finding it's a good innovation. That's part of my research, is to do this and to actually use Spotify in that way as a creator. So thanks, and I'll see you next time.